day.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. Just before I start today's video, anyone who's interested in joining my Signal service and receiving my personal trades, then please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small joining fee of $29.99. Let's have a look at the S&P 500. Yesterday, we finished the day down 0.7%, which isn't too bad. You know, of course, we were trading in negative territory for the most of the day. But today, we have opened up rather strong. We're up around 0.79%. So we've scrapped yesterday's losses, and we pretty much find ourselves trading where we were at the lows on Friday. So currently trading at around 4,063, still below the 50-day EMA. Guys, it's as simple as this. You know, do I know where the market's going to be trading this time tomorrow or at the end of this week? No. Your guess is as good as mine. You know, I get criticized quite heavily on YouTube for not knowing where the market's going to be, you know, this time in 12 or 24 hours. And, you know, my guess really is as good as yours. I do not have a crystal ball, but, you know, the longer that we look out, you know, when our time horizon expands, it can be a little easier to kind of predict where the market is going to be. So, you know, at the end of a week, is the market going to be here or up here? I don't know. Again, your guess is as good as mine. But what I do know, or what I feel that, you know, I have a good idea about is that, you know, if I ask myself at year end, is the market going to be closer to this area here, or, you know, back up near those all-time highs to, you know, perhaps this area here? And my personal belief, and again, you don't have to believe in it, you don't have to agree with me either, and that's absolutely fine, I completely understand, but my personal belief is that the market is going to be closer to the all-time highs. I'm not saying that we're going to go to the all-time highs, but, you know, let's say if the market was trading here, for example, I think that we are going to be closer to the all-time highs. So what does that mean? If we get any downside movement, you know, perhaps within the next couple of weeks or months, we go towards that 16th low, which again, I don't believe we will actually go and retest the lows that we achieved on June 16th, but I think it's definitely possible that we could go as low as, you know, perhaps 3,900, maybe even 3,800. But if we do that, I'm going to be dollar cost averaging towards the downside, okay, with a risk management that allows the market to go to the June 16th. If we were to break below the June 16th, then of course that's where my stop loss is, but I'm going to be dollar cost averaging, and I'm actually quite happy if the market continues to trade lower. Why? Well, it's because it creates value. I'm getting a better value for my money when investing it, because don't forget, my ultimate belief is that eventually, once things do clear up, perhaps when we start to come out of winter, or, you know, if we go into the strong seasonality period, which is anywhere between October all the way through to January, February, you know, my personal belief is that we will start to rise again and take out the swing high that we achieved a few weeks ago up at 4,300. And then that means all of my dollar cost averaging trades and positions will then be heavily in the money, and then, you know, as we go into next year, we can then start to plan as we move forward. So, you know, I don't want people criticizing me. You know, I'm not saying that the market's going to go up straight from here. I've never said that. I think you know, it might even be my fault where I've just come onto YouTube and I haven't explained things as well as I probably should have done. So, you know, I'm trying to explain my strategy as easily as possible, as simply as possible during today's video. So I welcome price movement towards the downside. My personal belief is that we don't take out the June 16th low, and you know, if we do continue to move lower, then I'm going to continue to dollar cost averaging with a risk management that allows the market to go down to June 16th, because my ultimate belief is that, you know, by year end we will be trading back up near those all-time highs.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.